G'day folks, welcome back to another update for Bitcoin and Ripple. Now the chart is showing a bullish momentum overall, but watch for a short-term pullback with some bearish divergence. Before we go any further, make sure you hit that like and subscribe button to support the channel. And in terms of the outlook as of today, May 5th, Bitcoin is trading around $94,500, buoyed by strong institutional adoption, US government accumulation, and bullish forecasts projecting prices between $120,000 and $210,000 by year end. Ripple's XRP price near 216 faces resistance at 225 amid ongoing SEC litigation, but optimism persists due to potential ETF approvals and bullish technical indicators suggesting significant upside. So we always look at the long-term trends first. We've got the monthly here, and you can see there on the price chart it's above our moving averages. There's no CCI 150 for the monthly. On the weekly, likewise, although the price is pulling back towards those moving averages, so showing some weakness. You can see there on the CCI 150 is actually broken below the moving averages, so giving us predominantly a bearish momentum on the CCI. But there's a bit of a pullback, but not quite bearish, I would say, on the price chart. So neutral positioning on the weekly, and on the daily, we've got the price, the CCI 150 and the CCI 1500 down here, and this CCI 1500 just gives us a longer term smoothing trend as opposed to the 150, but that's still giving us bearish momentum at the moment in the short term on the daily. Now if we go to the 1 hour time frame, we'll look at any micro moves to see what's happening in the smaller time frames. So again, predominantly bearish momentum according to the daily. We always trade in the direction of the higher time frame. Now back here we had a bit of a break to the upside, but notice here we've got a bearish divergence at the moment on the 1 hour time frame. Lower highs on the CCI versus high highs on the price, and that was projected after our last update, indicated by that dotted line there. Now if we were to draw a Fibonacci pullback, we take it back to the significant low before the divergence started. You can see there it's already broken below that 23-38% range, and actually currently broken below the 61%, which is a key area to look out for. So that's a bearish momentum at the moment on the 1 hour, and likewise the CCI showing continuous break to the downside. Now if we go to the back testing, I've got the stop loss approach here and the average down approach here. And what I've done here is I've started the back testing to where this CCI 1500 starts breaking to the downside. You could have started it back here, but I've just confirmed it by the CCI 1500 as well to that point there, and that's where these two back tests have been started from. So basically what it's showing is the stop loss approach. We take profit at 0.03% gain, and we stop loss at a 0.05% pullback. So at the moment, the stop loss approach is down about almost, $800 roughly. No, I'm sorry, it's about $100 below our baseline. The baseline's 100,000. So it's down about $100. And the average down approach has averaged down a few times, had a bit of a drawdown, a few points there. That was the biggest drawdown at that point. But again, what you do is you trade in the direction of the daily. So you would have probably closed that out at that point there on the 19th of March. And that was at that point there. So you were down on the stop loss approach to about 99,960. So you're down about $40. And this one, you're up approximately $200 on the average down approach. Now you would have taken another short trade when that daily broke below again and closed out again, a little break there. And I've got it color coded there on the CCI 150. Or if you had to let it drop, let it trade in the whole period according to the CCI 1500, then you would have let the whole thing go, and you'd still be in the short positioning at the moment. I do pay attention to the divergence. So you've got a bearish divergence there, and that was a confirmation. Now you had a bit of a drawdown there. The price went against you. That's possibly where you could have started seeing a break to the upside. You could have taken your profits off the table. You had a bit of a drawdown, but then it broke down again. So again, always pay attention to the higher time frame. That's where you probably would have closed out your trade at that point, and that was giving you a return there at about $555. But then once you started seeing a bearish divergence again, you enter a trade again on that point. So that was Ripple, and now we're looking at Bitcoin. So on the long-term trends for Bitcoin, it's bullish on the price, well above the moving averages on the monthly. And you can see that it's broken below into that moving average band on the CCI 150, so somewhat a neutral positioning. So just be cautious about going long if you're trading on the weekly or higher time frames. On the weekly here, we did have a bearish divergence, broke below the CCI 150 and also the price, but it's finally made another break to the upside above the moving averages on the weekly, so giving us a somewhat neutral positioning again with that moving average band penetrated. On the daily, again, it's bounced off that major resistance up there at 108.263, gave us a double top up there, and that was also in conjunction with this bearish divergence. The CCI kept dropping, and that broke down below our 38% minimum Fibonacci retrace. Now since then, more recently, it's broken up through the CCI and the price, and also you notice the CCI 1500 is broken higher as well, so confirming long positions to be taken on the intraday time frame. But do note the daily is broken into that moving average range, so cautiously I wouldn't be going long at the moment until I started seeing that break higher on the daily. If we go to the intraday chart more closely, look at the micro moves, you can see here we've had a few bearish divergence. I've highlighted all of them. The first one would have been to that peak there, so lower highs on the CCI there versus higher highs on the price, and that pulled back slightly, then it bounced. And just to show you how that works on the Fibonacci range, so if you take it from that high, you could take it back to any one of those points. You can see there to that previous low before the divergence started, that was at 23%. You're just shy of that 23%. It bounced off that. Now since then, it's actually, the price kept rising, but the CCI kept dropping, so you've got to be very cautious when you see the bearish divergence. The next one was at that level, another slight drop off there, and then more recently we had a break above to a new high on the CCI, but that was still lower than that previous high. So again, looking at that divergence, and if you look at it closely as well, we've had another bearish divergence there, and since then it's dropped off a lot more strongly. Bit of a tip though, when you get a lot closer divergence ranges like you did in this case, you get a lot more volatile breaks, in this case to the downside. So just always pay attention to those very narrow bearish or bullish divergence. So at the moment, predominantly short trades to be taken after we've taken a few long trades during that period. And if you're to take the long back tests, starting back there when the daily broke above the moving averages of the CCI on the daily, you would have taken those long trades on the stop loss approach and the average down approach. So again, you would have let it run, and you probably would have started closing out your trades at this point now here. And that would have been, you got to pay very close attention. As soon as it touches that moving average range, you take out your position, close out your positions, and that would have given you a nice little game. Notice the drawdown, had you let it stay in there, once that CCI has penetrated deep, it started taking back all your profits. So at that point, that would have been an ideal area to get out of it, especially after seeing these divergence or bearish divergence. As I said, I'll use those as exit signals. So sometime during that period there, during this period, you would have got out of the trade and not let it run through the whole period.